Welcome to the Mental Vet Investing Podcast with your host, Mike, where I talk about investing strategies with a frugal foundation from a veteran's perspective and to invest in self-mental awareness to ultimately become free of bad money habits and stay financially independent. Episode 4. Welcome back, everybody. Hope everybody's doing healthy and well. And this week, I decided to get right into the stocks. My initial plan was to talk about real estate investing and start that whole series. But with recent events this past week, with the GameStop drama, I felt it was necessary to go ahead and bring up the stock investing. So is investing in the stock market right for you? And full disclaimer, I am not a financial advisor. I only express my opinions. This podcast and these videos is for educational and inspirational purposes only. Please do your own research and investing decisions based on your best judgment. So I decided to title this, Is Investing in the Stock Market Right for You? Because I'm going to discuss in today's podcast about, I'm going to get right to it. The dirty secret, or maybe not so much a secret, that peeped its head this week is that it's interesting to see the power of these brokerages, the power that they have over you. I think the most astonishing thing that we've discovered this past week is that a brokerage company can just shut you down. You are not going to buy any more stocks. Goodbye. And we're supposed to be a free market society, free investing. In this episode, I'm going to cover all these things. And another disclaimer, I'm not very savvy with investing. I know just enough, and I'll be upfront. Investing in the stock market is not my primary methods of investing. It's I do invest, and I have traditional like a TSP, and I have dividend funds, obviously. But basically, in this podcast, I'm just going to talk about the differences of benefits maybe versus like doing every individual investing, such as using an app like Robinhood or Webull or Vanguard or Fidelity. And then the difference of having index funds compared to just buying stocks and doing it yourself. So we'll get into it. So if you're an avid investor in the stock market, please forgive my lack of terminology or maybe my lack of complete understanding. This podcast is just for me to vent and to get you to think, is investing in the stock market right for you, especially now when we've seen things more clearly. And so what are those things, right? So last week, if you've been paying attention to any media or news, you've known that the GameStop blew up, right? Went through the roof, to the moon, as they say. And there was a reason behind that. So the reason was that you have these hedge funds. Excuse me, I'm drinking my coffee today. You got these hedge funds that are basically a group of investors, professional, high class, high society, whatever you want to call it, investors that short buy stocks. Short buying is essentially buying a stock borrowing a stock from a company. In this case, it was GameStop, where you borrow it and then you return back later in hopes that the price went down. So the stock you return that, and then you get to pocket the difference. But this hedge fund company was short selling this stock quite significantly, beyond 90% of the stock worth of that company. And also what they were doing is they not only were short selling that, so they were borrowing the stock, then they were selling that stock to other investors. And then essentially they would return the stock and collect the difference of GameStop at a later date, right? It's all part of the schedule. It would be considered their call options. So what happened was you've got that, and that is nothing new. right? That's been done for a long time. It's a very complicated process. I don't know. I don't do any short buying at all, or I never will. It can get pretty complicated. And so this hedge fund, excuse me, was doing that, and they were short selling the crap out of this GameStop. And there was also you got AMC, and there was a couple others. So what happened was you got them doing that. Now you have regular everyday investors, such as myself. Or you download an app such as Robinhood, you start buying stocks. That group of investors, they call them retail investors, right? Little peons, little people, as they say. Us, yeah. So we're retail investors, and they got on a group chat through the I think it was Wall Street Bets, Reddit, and everybody was collaborating and just basically saying, "Hey, this company is short selling the hell. Well, this hedge fund is short selling the hell out of this stock." Up to, I think I even heard it got up to like 100 and something percent, over 100%, which means every stock available was already out, and then they were doubling down on those stocks. So that was insane. So that, I think from what I gathered last week, that this situation was a rare, very rare situation to occur. So these Reddit investors started buying the stocks and forcing the price up. Well, that's obviously very bad for this hedge fund, right? So much so that was forcing the stocks up, forcing the hedge fund to try to buy back the stocks, give them back before they lose too much money. Because now obviously they're going to lose money. You bought the stock at $2, let's say, for whatever. And now you got all these investors pushing it up, $3, $4, $10, $15. Now they not only have to return what they bought at, but at the difference of what the stock is currently, so that's very bad for this hedge fund company. And that's about as deep into that as I'm going to get. Obviously, you have now other investors, professional investors, looking at saying, "Hey, that looks like an opportunity for us to jump in and push it up even more." And then so there's all kinds of different things happening. But the thing that put the light on the issue for me, that made me realize, wow, this is not good, was when Robinhood decided to shut us all down. And they shut us down. They did. You know what I mean? I do not have a Robinhood account, by the way, just to be upfront. But I know plenty of people who do, and they were pretty upset, obviously, when you're now putting money into, let's say, that GameStop because you want to take on that ride, or whatever. Maybe you think you're going to put in some money because it's going up, 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 up. By the way, just like Tesla does, right? Tesla shot through the roof. And 2020 definitely saw that, didn't they? I mean, there was plenty of people that were catching word of this stock and they decided to invest. And maybe they got to reap the benefits as we ended the 2020 season and when Tesla split and all that. So really, what is the difference with this Reddit group of investors? There is no, I mean, they're essentially the same thing. People are, oh, okay, we're going to buy into this stock and hope that it goes up and hopefully benefit. And not only that, there's probably more people that say, hey, I want GameStop to survive, because from what I understand, they were about to, go bankrupt, which is why this hedge fund was taking advantage of that, right? Which is legal, which is crazy. And from what I understand, hedge funds don't have real stringent rules that are overlooked by any main governmental source or like an SEC or anything like that. I mean, it's crazy. So two sides to that. One, the little guy got over the big guy. So great on that. But two, you got Robinhood shutting their app down. And that's it. Now, nothing's been proved. From what I last read, the SEC, I believe, is going to open an investigation to that. But as an everyday investor, or as they call us, what do they call us? Retail investors. You sit back and you look at that and you think to yourself, I think to myself, what the F? No, thank you. I don't want any part of that. If you are able to shut me down and I can't put any more money into the market, I could essentially lose, right? I mean, obviously, and they were allowing you to sell, but at one point, I mean, I think the stock was shut down when it was. I don't remember. I know it was low for the GameStop. What are you going to sell? I mean, you're going to sell and take a loss possibly as a normal investor. But they were making that look like, well, you were still able to sell your stock. You just couldn't purchase anymore. And if you have any savvy to the stock market, you typically want to buy when it's low, sell when it's high, right? I mean, that's the idea. So when stocks are in the red, it's not always a bad thing, you know. So that is no bueno, no bueno for me, right? Um, and if you want to know more about that, and if you don't already know, a lot of there's some YouTubers out there, and Graham Stephan has a really good video that breaks this whole process down pretty well. I know when I watched it, it helped clear up some questions that I had, and then I continued to research out the articles, and then they became more sense. I understood them better as I went forward and watched and read articles about what happened. And I'll link if you guys are watching this on the YouTube channel, I will link that down below. Most likely, you guys probably already know about those YouTubers, but if not, hey, great source, and I'm not embarrassed to say, I get a lot of information off these YouTube channels because helps me understand what the heck is going on. So another good one is Meet Kevin. Has a mass group of following that he does these live shows explaining that whole entire process. And for us retail investors, it's nice to have those resources because otherwise you're going to have to find it out through MSNBC. But you'll find that some of those programs are not always giving you the straight facts. They sure do a good job of making it look like they are. But if you start looking at who is in with what, you might only get a one-sided opinion about something. So I've always made it a habit, especially with our times we're living. I get my news sources from multiple different things, and you better believe YouTube is a part of that. So moving on, we wanted to get that out the door. So if if anybody's listening and they lost on all this, I really do feel for you. This episode is for just to take a look and think about what's really going on with this stock market stuff. It's just crazy. And I'll be honest, I have feelings of like, I don't want to, I'm not, like I said, I'm not a big, heavy investor. I work way too hard for my money. So I'm very particular with what I do and how I do it, but I have a Webull app account. So, but it's not, trust me, I hardly even know how to use that thing. But yeah, so, that whole thing with Robinhood and Webull also shut down people. And there was a lot of others, I believe, a lot of the more traditional, I think E-Trade locked it down for a while. But from what I understand, Webull was forced to stop allowing people to buy the GameStop because of where they get their clearinghouses. They call them clearinghouses, or essentially, it's just the folks that pay the money that's owed or paid off. And I'm pretty sure the GameStop was going through the roof, and people were getting scared, so they told them to shut down. But again, think about that. They've got the power to just shut you down. Nope. Sorry, you can no longer buy this stock. But we have other stocks available on the market for you. I don't give a shit about those. I've got, this is what's hot. This is what's going on. And let me get involved in that action or whatever. Right. By the way, these hedge fund companies been doing that for decades. So enough on that. So we're going to move on. So I'm just going over my list here. So yeah. So that gets me to this question of, is the stock market right for you? All right. And depends on your situation, right? I mean, I guess, what are your tolerances? What can you afford? The main thing with the stock market is you have got to research these companies almost as a full-time job. And honestly, that's the main reason I don't focus my 100% investing in the stocks, right? It's so time consuming. Yeah, you can willy-nilly it and you can just say, you know what? I've seen this one YouTube kid saying that this stock was great. I'm going to do that. Hey, if that's what you're going to do, great. I, I've done it, but I don't, as I mentioned before, everything I do, I get it's like, okay, I see this one thing on YouTube. Another good YouTuber is Jeremy, I don't know how to say his last name, Lafarve or Lafarve. He's got a podcast or a YouTube that's called, I'm kind of jumping around on my list here, but financial education. Um, hey, that guy, again, he breaks down stocks very well. And so, I would recommend looking at that maybe as informational purposes only. Because he breaks down a lot of stuff that I just, I don't have time to research Apple and find out what their yearly earnings, their quarterly earnings, what they're making, what their CEOs do. I mean, and really you need to, because you need to really get the whole fundamental of a company and see if it is worth you putting your hard-earned money into that particular stock, right? So, but he's got a good one, and I'll definitely watch his, and then I'll look up reports. I'll just Google search, like Apple, for example. I'll Google search their earnings reports. Are they a dividend stock or not? And I always look at that because I want a return. So you have index funds, which is like an S&P 500 group. Your TSP account, it could be set up as that such, too. But those are 500 companies that someone else is picking for you, and they put in there, and you get the dividend out of that. And depending on how much you allocate to those funds, it's going to just, basically decide how much you make. And I think, in my opinion, I feel that's really the best way to do it with stocks. Is the dividend stocks, the S&P 500s. You don't have to think about it. You just put it in and forget it. Another really good YouTube channel that I like to watch is they're called Our Rich Journey. It's a husband and wife and their two kids, and they really break down into a lot of good details how they set up their Fidelity accounts, how they were able to retire early, how they got their kids investing, and I really like that channel because, again, they broke down a lot of stuff, and they'll show you, like, this is a Fidelity account. We went into this VFT, this whatever particular fund, and we put this amount of money per month, and then you forget it, right? Like, for example, I think Fidelity has 0 index funds, which is 0% expense ratio and no minimum investment up front. So those types of things I think is really good because you can, it's structured. They're going to, a brokerage firm or a company is going to be managing what stocks to buy, what stocks that are providing the best dividends, and at a very minimum cost, or in most cases nowadays at no cost, right? Which I think Fidelity now is getting pretty cheap. Don't quote me on anything current right now. I do not personally have a Fidelity account. But I've been researching quite a bit because we want to get one going soon. But really, when it comes to the stocks, me personally, I just feel like that's the more safe way to do that. And when I watch this Rich Journey episode, they get you thinking about it, and then you think, okay, now I need to go and find some factual things for myself. So you watch a video, and then you look at your own personal situation, and it all begins with your tolerances. So if you've seen if you've seen my previous videos, or if not, I hope you do, um, where I get into building a foundation, a lifestyle habit of being frugal to have money that you start saving, but you don't really feel like you're saving. You know what I mean? So you start this whole lifestyle, and you're being frugal, and you have this money saved up, and then you can slowly start investing, right? So you start investing, but like I said, the stock market is just really, and I got to bring this up, with what happened this week, and the whole purpose of me doing this episode was, it's really kind of scary that they have that type of power. Just going back to this Robinhood app, it was built on the premises of allowing everyday investors to get into the game. Essentially, that's why they called it Robinhood, right? The guy built this app with the name Robinhood, you know, and now essentially they're saying he's doing the same thing now, you know. But I don't know, nothing's been proven yet. But you know, when you see something, if it looks like a duck, it walks like a duck, it smells like a duck, must be a duck, right? I don't know, but it's real nerve wracking to put it to you like that. I mean, I'm definitely not gonna be a heavy investor into the stock market for sure. I have a TSP from the Navy, and that's it. um, so there are, anyway, back to what I was saying. So you have that, and yeah, with these YouTube videos, please, I hope you're not laughing back there, saying this guy's crazy. It's really, the technology. You got to look at it that way too. Technology has allowed everyday people to get in on the game, you know, and they've used that technology to communicate with each other, whether that's YouTube videos, right? Or chats. And, it's people share things and then they take their own decisions and invest. So it's really going to be interesting, I guess you can say, how this is going to go forward. And what I'm referring to is using apps, these like Webull, M1 Finance, where basically you set up, M1 Finance, you basically set up an account and it'll allocate a couple different things into one fund. So you pay one-time payment. It's almost like an index fund, like when you're investing once a month or whatever, and it'll spread out to different things that you want invested. But what's nice about that is you can go on there and change it around whenever you want. Like, for example, TSP, I believe you only get 2 times a month. You can go in and reallocate things. And then you have the Robinhood app, which most of you, or maybe you're not familiar with that. It's just basically an app you download, and then you set up your account, and then you can start buying stocks. And then you also have Webull, which is the one that I use. Very user-friendly, and I can see the side of it where people might think, oh, it's just it's a gambling app, because you can get in there and you have to get verified. You have to put a certain amount of money to get it open. But once you get going, boom, 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 you're off to the races. You can buy stocks, sell stocks, you can have margins, and could be an issue, I guess, for someone who doesn't know what they're doing, or maybe they're over leveraging themselves. But if we're a free market, if we're a free economy, that's up to the individual user, I'm guessing. Could they put more restrictions in place to not allow you to put so much money or over leverage yourself? I guess, I don't know. But what's nice is you get that, and then you start learning how to invest, and it, maybe you can get some money. And so there's that. But getting back to this YouTube thing, you get these people like Jeremy and all. I mean, they have Facebook groups and all these different things. But really, you got to do, like, again, I'm not saying to just use that, because I certainly don't, but it's something that, it's what a lot of people are doing, perhaps, as they say, the retail investors. They're watching these videos, they're getting ideas, they're opening these brokerage accounts and putting their money in, and they're getting a piece of that. Some folks say, why should that just be secluded to the the elite or whatever. So you have that. But getting back to the point of, is it right for you? So that's something you got to answer for yourself. Are you comfortable proceeding now, putting money into the stocks based off what we've learned this past week? But even before that, you know, do you really have the time to educate yourself on these companies and put your money in yourself, or let someone else do that for you? So those are the two options you have. I would say, for me personally, it's just best to have something like a TSP account, or a Vanguard or Fidelity account, and learn what account setup is right for you, because they have a lot of them. And so watch a video, like our rich journey, and say, oh, okay, here's a family of 4 and they did this. All right, let me go onto the Fidelity website and read what that account is and how much I would get and how much I would pay, and see if that's something worth for you. And it's all about your own personal goals. Are you going to invest for the future? Do you want to have something invested for your kids, something invested for yourself? But I feel like it's just a more structured thing if you'd go that route, if at all, if you're even into it. Like I said from the beginning, stock market investing is like second, third, or fourth on my priority list of investing. It just is, but I totally feel that it's still worth having. I mean, you got to diversify your portfolio. Excuse my language. I can't pronounce things very well. You don't want everything into one pocket either. You don't want everything into the stock market. You definitely don't want everything into just real estate. You got to find that happy medium. And oh, by the way, what about investing in precious metals? That seems to be more concrete. Investing in gold, silver, right? That's been decades worth of safe investing. Now, obviously, gold might be a little down or maybe a little up, but when you start throwing in the inflation and where our dollar is going, it's something to also consider, other than the stock market, right? And I will not get into Bitcoin because I just don't know enough about it, and it's not something, again, I feel comfortable talking about, right? If you're watching this on YouTube, please hit the like button and subscribe to the Mental Vet Investing channel. The only thing I will say about Bitcoin is, I'll leave you with this. I don't know if you've read the article about this guy or seen the article about this guy who has buku tons of money in Bitcoin. I didn't research it for the podcast, so I'm going off my memory, so I don't remember his name or the amount dollar, but it was buku. Okay, that means a lot of money in Bitcoin, and he was on his 8th try to log in. Like, he forgot his password, and there's an X amount of times that you can use this password before it's gone forever. I mean, I'm sorry, but no, thank you. I don't want any part of that. And there's been, I've been, it's just crazy. I've heard of people that were getting scammed. I had a friend of mine who was doing Bitcoin, and I guess there were scammers telling him he needs to give their password to get their whatever, their Bitcoins. And I get the idea behind Bitcoin, in that there should be something that is outside of the dollar way of having our finance, or our world market finance set up. Because when you have the dollar and you have the governments influencing what's happening to that dollar amount, which is what we base all of our currency on, right? I mean, I get that there should be a different system set up or something, because it's kind of, well, it's manipulated. Like right now, they're just printing money and poofing money out of thin air trillions now of dollars. What is trillion? Holy crap. That's beyond my understanding. But that's what they're doing. And, so the cryptocurrency is supposed to be outside of that in a more secure, structured, no one person or entity can influence it to make it go up or down. I get that, but not for me. I'll stick with hard factual things. Thank you. So I'm going to wrap this episode up because we're going a little long today, but it was a juicy one. Stocks is something I found this last week to be just very entertaining and educational and enlightening for someone like myself who, I've never thought investing in the stock market is bad. And, I do a little bit myself, but, I do a lot of reading and I do a lot of watching. And a lot of people base their structures on investing in the stock market. And then there's a lot of folks who do not. Plenty of people stay away from it and invest in more hard things. But the other thing you got to remember about this is look at some of the statements. We had a big earnings report that came out, I think last week or early last week. And a lot of these companies are doing fantastic. Apple did extremely well. They exceeded their earnings report from a year ago. And you would think that should have drove that stock price up, but it didn't really budge that much. And you can think about what that means, but is that because of what's happening with the GameStop? Were people so over leveraged that they're pulling from other stocks to make up for that? Or are other people just jumping in on the game because now there's so many more users, or I should say so many more players of the stock market now, where it now is going to affect other stocks? And if you kind of can tell where I'm going with this, what will that do to the overall market as we proceed, as these things become more and more frequent, perhaps? What's the next stock that's going? Because there's plenty of companies that will be going down, and I'm sure there's plenty of hedge funds that are out there ready to take advantage of that, like vultures. Get on there and bet that they're going to continue to go down and profit. And then how many more times are there going to be groups or individual retail investors that catch on to that or see that? Because as I said in the beginning, do your own research, right? I'm sure you can find reports of what so-and-so's doing to this particular stock or what this stock is doing, or, and if you're in the right chat, or if you're, whatever, you can start buying into that stock. But what is that going to affect the other normal traditional stocks? When you think about traditional stocks, you're thinking like the more secure ones, Apple, Microsoft, all the main big time companies that have been around, heck, look at Amazon, and nowadays Tesla, right? All those stocks are real traditional. But is these outside events that we're seeing with this short selling and these people now going to start affecting that? Or will the brokerage companies or these owners of these apps shut you down to prevent that? There's a lot more going on, right? There's just a ton more going on with stocks. And for me, as a small time little man, I don't know. By the way, I have anxiety issues, so I definitely need, I'm retired now, so I'm trying to live, without stress as much as I can and control myself. Getting involved in that game, But hey, like I said, it's all about you, not me, and I'll bring it back to, is investing in the stock market right for you? So, hey, man, hopefully by the end of this episode here, you're kind of thinking to yourself, yeah, it's right. I know what I'm doing. This guy, he's just whatever. Or you're thinking, yeah, no, thank you. And look, I'm not telling you don't invest in stocks. I'm sure, I just feel like things are happening now, and if you're going to play that game, just understand what the rules are and what the players or the people who are controlling things, what are they doing? So you can kind of navigate your investing through those choppy waters, right? Stormy weather ahead. You know what I mean? Um, but it's still, traditionally wise, you see people who retire on investments. You see a lot of people who live financially independent, or they've been able to quit their jobs. They're living off their investments in the stock market, their annual payouts or their dividend payouts. And I mean, compound interest, fantastic way to do it. It really is. But you just put the time into it to research and learn it. You've worked your tail off for your money. If you're living frugal, get the benefits of that and invest smartly. Don't blow it off. And I'm sure most people won't, but the the doors are out there for you to open, and just, are you going to choose the smart path and stay on the more structured path to get through that door? Or are you going to do the more wild path, or maybe less risk path, so there's all those different things. But I'll leave it with that. And I'm just looking through my notes. Sorry for the lack of airtime here. I apologize. But I think I basically covered the main points of this last week's stock news. And if you feel you'd like to collaborate, please drop a message on the Anchor app for podcasts. If you're on YouTube, drop a comment below, and I will definitely get back to you and exchange, thoughts or ideas. Or maybe you have something that would have been better brought up. I can certainly do another podcast about. Feel free to drop a line and we'll comment on that. Other than that, stay safe, everyone. Take care. Keep plugging away. And I hope that you come back next week, as I will probably most likely get back into where I was going to talk about real estate, but who knows? I might keep going with this as we go into next week and see what else is brought up from all the recent drama of the stock market. Thanks again, everybody. Be safe. We'll talk to you later.